So anyway, dude, all right, the Nasdaq finally broke out of this descending triangle that it was in for some time now. And I don't really want to call it a descending triangle, but it was definitely descending. You can tell by this slope. And I like to use the rule of thirds, which is actually a photographic rule, but I apply it here. I use this for rules of three. And as we can see, it hit here off this trend, it bounced and rejected off the trend again, and it came and hit this trend once more. And this was the rate cut day, right around here, 18th and 19th, and voila, it broke out the day after the rate cut, and it broke out of this descending trend. And here we are. So let's clear this. Let's remove our drawings, and I'm going to hide my moving averages for the time being. As you can see, we could have had a pretty gnarly head and shoulders here. This messed me up, and I think this messed a lot of people up here. I don't think they thought that was a head and shoulders right there, but that was the yen carry trade, and that yen carry trade really blew up some people's accounts, I'll tell you that much. So going back to this, we're going to draw a line across here, and this area right here was acting as support and is now maybe some form of, let me do a horizontal line real quick. So this area right here was acting as, resistance after it broke out and it melted up and it had all-time highs, and it came crashing down because of a crowd strike, which was also exacerbated by the yen carry trade. And then we had a dead cat bounce, what we thought was a dead cat bounce. And this was where we were in this bull bear uncertainty. And boy, let me tell you, it sucks being in this uncertainty zone. It's like being in the trenches. But we were rallying and we did find some support. And this was leading up to the Fed rate cuts. And everyone did not know what to make of it. There was like chaining 4 by 4. It's like a 25 cut can be good, a 25 cut can be bad, a 50 cut can be good, a 50 cut can be bad. So you multiply that out, what is that? 8 different deviations of good or bad news? What do you do with all that information? Oh, I'll tell you, you take your money out of the market and you wait for the market to make a decision. And that's what I did. So after the Fed rate cut, the next day it jumped and it broke that line that we were referencing earlier. And so far, it's been holding pretty well above it. And now it's coming to possibly retest all-time highs and melt up to all-time highs. One area that we need to get over, this area right here, this median, 500 is probably going to be, let me put it at 500. This 500 level, a little under 500, maybe 495. 495, 500 is really psychological number, especially 500. It's just a real nice round number. But once we get over this area right here, because you can see before, there was a bit of indecision. There was a bit of indecision going into it, and then there was a lot of selling coming out of it. So this 490, 495 level will probably be an indecision area. But once it breaks out and once it breaks over that 500 level, we're going to see probably blue sky territories and that melt up that everyone's been talking about. Now for the SPY, the Standards and Poor's has just been on an absolute tear. Now, as far as the pullback happened more so in the NASDAQ, and I think that's because a lot of people were really, really aggressive and just doing that yen carry trade and thinking, oh, this is free money because big cap, mega cap, big tech is just on a tear and they'll always be going up. They'll never not go up. And you can kind of see that because during that yen carry trade, the S&P held pretty well. And that's because the S&P is a more broad and diversified basket. But as we can see, the S&P is definitely breached all-time highs, and it's definitely in blue sky territory. And I think that it will actually melt up a little bit more once the NASDAQ can kind of break out, and we'll see maybe some more broadening out in other sectors outside of tech. So we might see areas such as like XLP maybe break out. I think XLU is a really good one. Some utilities do very, very well in low rate environments. The real estate, um, XLRE, XLRE. Now this, if there's one that I would hold, it's XLRE, because look at all this, look at all this. It's one thing to break out into blue sky territory and just, well, where do we go from here? We've never been in any of these levels before. Are we going to randomly get rug pulled? But you can see there's all these levels, there's all this data that we have with the XLRE, all these different zones that is just free game. And I really, really think XLRE is, we're going to see some broadening out in the market, and XLRE might be one of those winners where we'll see a lot more momentum in. I'm also really big on consumer discretionary. I just think that, depending on if we are in a recession or not, because it is discretionary, but for the time being, with rates starting to come down, consumer discretionary could go on a tear as well, and could probably come back to this all-time high and then potentially see blue sky territory. We are breaking out of this channel. We've been in this upwards channel for some time, and we do see price just breaking out. And it might come back, it might retest, and that might be a better point of entry if you want to get long. I think if we're gonna, maybe let's look at this on the weekly time frame, because if you want to look for pullbacks, I don't always like to move on the daily time frame. Sometimes it's subject to noise. So for me personally, I take positions on the monthly or the weekly time frame. Some people like to do daily, some people like to do 4 hours. Heck, some people like to do quarterly or yearly for that matter. But it's all up to you. It's all up to your system. It's all up to your preferences. Going back to this though, we broke out of this range here, and we broke out with such a tremendous upward force, such a tremendous upward velocity. I would not be surprised if, and this is I'm just going to put on the moving averages, and this is the 10, 20, 50. I would not be surprised if price came back to retest this level that it just broke out of. Now, I'm not saying it has to come all the way back down here, but I definitely think it could potentially go sideways, maybe go sideways, let these moving averages catch up with it, or potentially just come back for a slight pullback to maybe this 190, 192 range and see how price reacts here. And I think that'll be a really good buying opportunity for some longs to get in there. So we're taking a look at Meta on the monthly time frame, and wow, from August just to September, it was just phenomenal. I really thought we were looking at a rising wedge. Disregard you can actually include the wicks. Some people like to include them, some people disregard them. I thought I was looking at a rising wedge with a volume discrepancy and a volume divergence, because volume has been kind of dwindling here. And we were going into September, and I was thinking, really thinking to myself, oh, well, bear season's in town, and this looked like a decent setup for a rising wedge with a volume divergence. Needless to say, start of the month kind of did have that, and I kind of did take my profits at the start of September, where we kind of did break down a little bit. And then when I noticed it started rounding out and it started broadening out, and we saw buyers picking up, I kind of got out. I got out on this Friday, but it wasn't for the entire move of that 3% move. I got out around like 1.5% midway through the day, because, well, you know how markets move. Markets move very irrationally at times, and we have a lot of economic events going on, and the VIX is pretty high, so we're in this uncertain period. But I did take profits on it, and I was very happy to do so. But really on a tear, actually. Now, I'm going to look at Microsoft and Tesla after this, and boy, I'll tell you, I felt really strongly about these two, because they were coming in at a really nice support level, in my opinion, and they move relatively well, especially Microsoft. So I had some faith in Microsoft, and I bought a swing end of September and it was right around, I think it may have been like 450. I got out of it a little bit too early for my liking, and I should have rode my winners a little bit more. I think that buyback they announced really made wonders for them, and it moved up more than anticipated. But I took some profits, which was nice. Um, but yeah, it was really good setup, and I really had this idea going into September seasonality. We'd see some uncertainty. We'd see some uncertainty in the Mag 7, and that's what would have us move sideways. We'd maybe see some days of some big techs dumping while others were climbing. And one reason I had that idea was because the start of the month, Apple dropped really hard, and I bought this dip out into October, and I felt pretty bad because I did not ride this winter at all, and I should have, but I got out right around 219, 220 because I thought, you know what, this may be the right shoulder. We may see seasonality, September seasonality kicking in. Um, it's still September seasonality. We still have a ways to go. Anything can happen. And I got out. And I got out, I think I got out rightfully so because we came all the way up from 213 all the way to 222 in 2 days' time. And we saw like a lot of selling pressure near the end of that day on that night, on the 18th. And also, I didn't want to hold too many positions going into a Fed rate cut because I don't know what to make of it. It could be good, it could be bad, it could be nothing burger, and we go sideways. But most likely, it's not going to be a nothing burger because the Fed's cutting rates. So I let go of it, and yeah, it was until October, and it was 230, and this could have been a 7x, but it is what it is. I'll take the 2x any day, you know. So and Tesla. Now Tesla, I had I went into this. I saw this hammer. I was like, it's at a pretty good support level. They have the RoboCab coming out. Some good news. We're still kind of trying to fight over this trend here, breakout. And I bought a 250. I bought a 250 swing end of month. It was actually for the 27th, which is for tomorrow. And it would have been in the money. And boy, I'll tell you, that would have been a pretty penny. And I sold it for a profit, but I think that one would have been 9x, or it would have been a pretty high return on my investment. I was buying it for pennies on the dollar. I think the position was I think it was like maybe $1, maybe 50 cents between that one and the Microsoft one. In totality, like less than $1, you know, and it probably went up to $6, $7, and could have held it, should have held it, but you can't always really ride your winners because there's a lot of uncertainty, especially now. We're in uncertain times with the election and the VIX spiking and the yen carry trade, and the Bank of Japan was going to come out too. Uh, we were after our rate cuts. We had the Bank of Japan going into next week, and we don't know what to make of it. And I think they did make a statement that they're going to hold off on doing anything with their interest rates until the end of the year, until December. So we might see a melt up. We may see the Santa rally. But depending on what happens with the Bank of Japan, we may see the yen carry trade come back to haunt us in the first quarter of 25. And if that does happen, who knows? Maybe it sparks a bear market. Maybe we go into a recession. Maybe that's a catalyst that causes a recession. So you definitely want to be cautious. I think for now we're fine, but going into Q1 of 25, I'm going to err on the side of caution.